The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Well, there seems to be value in a couple of car stocks, albeit a couple of different types of car stocks. Our value strategist, Tracey Ryniec, is going to fill us in on the details. First is an automotive group, right? A company that owns and operates car dealerships.
That's right.
Cars that people drive.
Right. This is a hot area because Warren Buffett just bought family-owned auto dealerships for Berkshire Hathaway. And then there's been rumors that George Soros might be interested in buying one or, I don't know, however many of these similar types of businesses. But yeah, the auto industry has been hot as more and more people are replacing their old cars finally with new ones. And this company owns auto dealerships across the United States and also in the UK and Brazil. They cover all the cars. I always get asked, are they just a Ford dealership or, BMW?
Sell all makes and models.
Yes, they sell all of them, and they also operate 38 collision centers, so they do the repairs on the backside. Wow. Like I said, the auto industry itself has been hot, and the dealers rank in the top 6% of all the Zacks ranks industry, so they're in this area where the earnings estimates have been rising. This is a Zacks rank 2 for right now, but they haven't reported yet, so things may change when they report. They report on February 5th, so we're going to hear from them shortly. They're also, as I said, a value stock, cheap, about 12 times forward estimates right now. You can see really good earnings growth here, about 12% for this year. Are expecting another 16% for next year. Of course, that could change when they report, but not much has really changed in what the car auto manufacturers are saying, because they always give the monthly tallies on how many cars they're making, and that goes right to the dealers. Now obviously they could sit on the lot and nobody's selling, so that could be an issue, but the story hasn't really changed with these automakers. They're still, or the retailers, they're still cheap. You can see people getting a little nervous recently about the auto stocks. These retailers have had big runs, still cheap, like I said, at 12 times. One thing to watch with these, with Group 1, is that they do have the UK and the Brazil dealerships. There could be some currency issues with what's going on right now, we've seen globally, but it's a small percentage of their business, and the UK has actually seen a nice rebound in auto sales over there as well. So people used to think that Europe would be a drag, but maybe not so much anymore.
Maybe not, all right. Then there's GATX Corp. They make rail cars.
Right. Little different, but they probably transport the cars in those rail cars. So they don't make them, they only lease them.
They only lease them,
So
okay.
that's one of the differences. I've been talking a lot about the rail car makers like Greenbrier and Trinity Industries. These guys buy from them and then lease them out to their customers.
Okay.
They've been in business for 115 years because the rail's just been around forever. You got to transport stuff. They are the largest leasing rail car group in the world. They are Zacks #1. They already reported, so we've already heard really good news from them. People were very nervous about this segment because what's happening in the economy and what's happening with oil, because they make both freight, or they lease both freight and tank cars, and the tank car is what transports the oil. So everyone was thinking, this is going to slow, but GATX said they saw no slowing in this last quarter at least, but that's when oil started to plunge down.
Right.
All the orders are in. They're able to lease out their cars at higher rates. This is key for them. So the demand has to be there in order for them to ask more money to get the lease. And they were at utilization rates of 99%. So basically every single car they have is being utilized by a customer. That's everything you want to see. You can see the estimates jumping here. They guided higher for 2015 than what the Zacks consensus was at. You always want to see that, a beat and guide higher. They expect a record year in 2015 again, coming on top of this record year, so they're not seeing any weakness from their customers so far in any kind of demand aspects. And you can also see 2016, there's been at least one analyst who is being bullish even about another year out and has raised for 2016. So everything fundamentally looks good. The stock is really cheap. It's trading only about 11 times. That's way cheaper than S&P 500, which is around 16 to 17 times right now. But you can see in this chart, I put up the one very volatile, as investors had no idea what they were going to report, where it was going to go. But if you have just a little bit longer term outlook, you know, even 6 months, say, to a year, the story is just really good with anything with the rail cars because the demand is still there. That could change, obviously, if the U.S. economy starts to slow. But so far, in the leasing area and in the rail car makers themselves, they're not seeing any change in demand.
All right, well, at least these two different companies that make different types of cars are driving higher.
Yeah, they are.
Own either one?
I do not.
All right, check out other stocks, stock picks, stock strategies, stock information, commentary, all of it contained on our website, Zacks.com, and you can link to it all off the homepage. So get on over if you're not watching this video from the website. With Tracey, I'm Terry Ruffalo.